Galloway is a construction manager and consultant, commercial and residential builder, and a certified inspector for all commercial and residential buildings. And now, here is About the House with Troy Galloway.
Well, hello, folks. Thank you for joining us on About the House. This is Troy Galloway, your humble host, and we have a fabulous show today. Let me tell you a little bit about Galloway Building Services. This is my company, and Galloway Building Services, we are a full construction inspection company. We do inspections on brand new construction. We do inspections on remodels. People do offices, buildings, commercial buildings, industry. Of course, we do home and building inspections. We also do construction litigation. We're actually one of the few licensed, if the only licensed in the state of Missouri and Illinois, for being a construction expert witness for litigation. So today we got a wonderful show. We got on Jason Halteman of PNC Bank, and today's show is a little bit different. We're going to be doing on commercial and building loans. Right now, this is a crazy world out there. Interest rates are all over the place. Lending, there's rules, regulations, they're changing every day. And I get asked all the time, who do you know that can take care of me? Who do you know that actually follows through? Right now, that's part of the biggest problem ever. It's just so nutty out there that people are overwhelmed. They don't have the right questions. They don't. So if you don't have the right questions, you can't get the right answers. So this is why Jason has joined us today. Jason, introduce yourself to the world and jump right in here. Tell us a little bit about you and your bank.
Sure. Well, Troy, thank you for having me. Sure appreciate the time and the opportunity. So my name is Jason Halteman. I'm with PNC Bank. Been a business banker for over 21 years. Before that, I got my degree in finance and marketing. Before that, I was in the Army National Guard for 6 years, but married with 3 kids. And so my specialty, though, is working with local business owners. My goal is always to get to know the business owner, the business, what they do start to finish, their needs, what they've done in the past, what they're doing right now, and their goals for the future. Then I marry up the best products and services and solutions that we offer from PNC Bank to help the business owner and the business accomplish their financial goals, whether it's through growing the business. Sometimes it's through a truck loan. It might even be a commercial real estate loan. They might be looking at buying another company or a competitor, but what I do is I offer the full services of the bank to the business and the business owner from start to finish.
How long have you been doing this, Jason?
So over 21 years, I've been a business banker here in St. Louis.
Wow, 21 years. So you've probably seen some crazy stuff happening over the last 21 years, but especially in today's market. So I know this isn't one of the questions that we was going to talk about, but it's one of my questions. So where do you, I know interest rates are telling us they're going to go up, but I mean, how much crazy is it going to get out there before we start seeing it flattened? Or is there anybody out there that has a clue?
That's the $1 million question. We get that asked a lot. But the one thing that I've really seen, Troy, here recently is the Fed's been raising rates. And so that's gotten a lot more people active, a lot more questions. Now we're starting to see a lot more deals happen quickly because people are seeing, the rates dropped back in 2008 when that unfortunate time happened. Ever since then, we were in a record low interest rate environment until these last 4 or 5 months where we started to see the Fed start to increase rates. That's really got people's attention because if you think about it, a lot of time the business owner, their biggest debt is their commercial real estate loan. And if that all of a sudden goes up, a lot of times a business owner will have a balloon on their commercial real estate loan that maybe in 3 or 5 years balloons. And what that means to the business owner is the rate changes to the rate at that time. And that can mean a lot of increased cost and monthly payment and interest they got to pay out on their biggest debt of the business. So the solution I'm giving my customers is a long-term fixed rate right now. We can fix the rate out to 25 years and just give them that peace of mind knowing that if rates go up, they've already locked in the rate with Jason for 25 years. They can just sleep better at night. They have to worry about what's going to happen down the road.
Yeah, I know. And a lot of, I think that balloon payments are fabulous if understood,
yes,
where they're headed. But how many times have we seen people just totally gotten their business? And I know other, not just balloon payments on your business, but homes too, and just wiped out, because they just wasn't expecting it. But interest rates. So if I call you up, because this is one of the questions that was asked me to ask you, is that if I call Jason up and I want to buy this strip mall, and I got my due diligence and I got all this stuff happening out there. Before I can even, we can get actually to the closing table. How long can you guarantee me, or can you even guarantee me to lock in my interest rate? Because right now, every other day we're hearing about it going up. How long can you lock it in, and how can you do that?
Sure. So that's a great question. I get asked that a lot. So what we do is when we meet with the business owner, we first figure out what your goals are for the building. And so, for example, what we're really good at is it's called owner-occupied commercial real estate loans, where the business itself is going to occupy at least 51% of the space of the building. So if that's the case, if the answer is yes to that question, then we can lock your rate in for 25 years. And so basically, the next thing that happens is we'll meet together, Troy, and I'll gather your financials and tax returns. And then once that happens, we get you approved for the loan. And that once I get a full package from you, the last 3 years, tax returns, business and personal, and your most recent financial statements, once I get all of that from you, it might take about 2 weeks to get it approved. And then once we get you approved, your rate's locked in right then for 25 years.
That's awesome. Well, now you said you work for local businesses or business occupied. Okay, so I work with people all around the world. And actually, I work with a lot of people outside of the country. Actually, I'm working for a lot of Californians right now. They're just having California. Okay, I'm switching subject, but the Californians, they can buy a whole brand new strip mall for what a house cost in the lower, end of California. Which I don't know if there's a lower end of it all there, but with that, what can you do? Can you help those folks? Say whether they're out of country or out of state. Because they're not going to occupy it; they're just buying the buildings.
Right. So we have so I'm in the business banking department, and it's key that the business occupies 51% of the space. Then I can get involved. I can really help the business owner. So if they're doing that's called an investment property. They're going to buy a house or some type of commercial building as an investment. If it's going to be a house, then I can refer them to our mortgage division, and they can do an investment real estate loan for them. Most of the time, sometimes they do it in their personal name to get a longer-term fixed rate.
Well, what about, say, if like we did one, and Joey actually did the drone over it. Really awesome, big hotel.
Sure.
And these were people from Somalia that was buying it. Can you help them kind of folks out? Because they're not going to occupy any of the hotel, but they definitely need some good financing or some good local help.
Definitely. So what I do is for hotels, I know another bank in town that specializes in hotels. And so I've been doing this for over 21 years. I know a lot of bankers. And so I know that there's a local bank in town that specializes in doing loans for hotels, and I immediately get them involved right away to take care of their needs.
So in other words, you're a great contact person to touch base with, and that's good to know. So with that, now another question I get asked a lot: commercial loans, and I'm buying a 4-unit apartment building, or a 6-unit, or a 12-unit. How big? How many units? I think I know the answer. But you know what happens when you think you know something. I'm going to embarrass myself right now and say, I'm going to ask the professional.
Yes.
How many units does it take to be qualified to be commercial?
So commercial, anything more than 4 units is normally considered commercial. But I still see a lot of people that'll set up an LLC to do a commercial loan to buy even a 4-family, just to make sure they do the loan in the name of the LLC.
Do you help them with that?
So I've got another local bank in town. They specialize in just investment properties. And so whereas we're really good at the owner-occupied loans, whether it's a conventional owner-occupied loan or an SBA loan, we do both. And I always give my customers both options, the good and the bad of a conventional owner-occupied commercial real estate loan and an SBA loan to buy a building.
Well, explain the difference, because I don't think a lot of folks know, including myself, I don't know that I know the exact nuances. What's the difference between an SBA loan, small business loan, versus a conventional loan? I mean, what's the advantages and disadvantages of each?
Sure, great question. So what I always do with my customers is I give them a side-by-side comparison of a conventional loan and an SBA loan. Some of the big differences of your SBA loan, you do have to occupy at least 51% of the space with your business. You've got to be a for-profit business. And the SBA loan, one of the big differences, allows you to put 10% down as your down payment. A normal, conventional commercial real estate loan requires 20% down, whereas your SBA loan lets you put 10% down. And I always give the example of just the $1 million example. It's an easy one from easy math. So your conventional loan, 20% down, you're looking at $200,000 as your down payment. But the SBA comes into play with a massive benefit at 10% down, at $100,000. And so the business owner could save $100,000 in their down payment if they go the SBA route, which lets them put 10% down versus the conventional 20% down. And in addition, the SBA, you can get a 25-year fixed rate. A conventional loan, we offer 20 years fixed, but the SBA will allow you to do a 25-year fixed rate.
What about as a business person? A lot of times I don't like to put cash down. I like to leverage. Can you help us with leveraging? You know, and if you can't, talk to us about how.
Sure.
And what that means to you.
Yep, definitely. So we definitely want the cash down, and so basically we'll finance, if it's conventional, 80%, and then we ask the customer to put their 20% down. So we're in it together, and so it's not just like we're financing the whole deal ourselves. We like it to be a partnership. So we're doing most of the financing at 80%. Customer comes in and does put their 20% down. So yeah, we're really good at loans where the customer will put in their 10% down for the SBA or 20% down, their cash down for a conventional loan.
A lot of us really have a lot of trouble with our books. You know, we try to hide our money. And so we put it in other instruments, other vehicles, you know, for investing. But yet we have this money here. It's there. It's just been put someplace else. So it makes our tax returns look like we're not doing as well as what we really are doing.
Yes.
How do you look at that? Can you see through this and help us? Talk to me about that.
Sure. Yeah, great question. So we always talk to our customers about when you're getting ready to borrow money, when you're getting ready to get a loan, then we say, okay, that's not going to be the year where you're going to want to take advantage of every write-off you possibly can. And so start definitely talking to me early in the process, not the day you put a contract in the building, then you come to me. Let's talk months, at least a year in advance, because you want to be talking with your CPA and having those discussions around, okay, well, in the past years, I've taken every possible deduction, every possible legal deduction to reduce the taxes you're going to pay. Mm-hmm. And that's fine. But when you go to borrow money to get a loan from a bank, the bank still wants to see on the tax return that, okay, they are making some money to be able to pay the bank back. But we do look at, some of the other write-offs that are legitimate, whether it's your depreciation expense, your interest expense, especially your Section 179 for additional depreciation expense. We look at your amortization expense. And if you've been renting a building, then we can give you credit for that when we look at the total cash flow of the business. And we always dig deep into that. And we look at the whole picture too, Troy. We look at all the money the business is generating, and we look at all the money the person's generating, and we just look at the global picture, because most of the time, the business, they do want to reduce the amount of taxes they're paying. And so maybe they pay themselves a little more, maybe they take distributions. And so we do look at the big picture to try and capture all the income coming from the business and the individual.
That's probably why it's really important to get ahead of you a long time ahead of time before, so is that you can give us a business plan, and that's a great idea, because I see that happens a lot for businesses, and but we've been talking a lot about buying buildings, but you do a lot more than just loaning money for buying buildings, right?
Definitely.
And that's what it sounded like. So what if I have accounts receivable or something? Do you loan money for any of that, until that money comes in? Is that something that you folks do?
I do, definitely. So when I talk about the entire picture, start to finish, your entire banking process, that includes your access to cash. And so I really talk to my customers to think about what's their cash position look like, what does their access to cash look like. To your point, Troy, accounts receivable, a lot of my customers, I'll set them up with a line of credit. And most of the time, the collateral for that line of credit is the accounts receivable or inventory, sometimes business assets. And so, yeah, that's one of the prime pieces of collateral we take for a line of credit is your accounts receivable. And most of the time we'll lend up to 80 or 85% of your accounts receivable, as long as you don't have a concentration in one customer, then it's a different discussion. But yeah, so
that makes sense.
Yeah, so to determine the amount of a line of credit you can get, we'll look at your current accounts receivable aging report and normally lend about 80 to 85% of that that's less than 90 days old. And then if you got inventory, finished goods, we can also use that for collateral to increase that line of credit. A lot of times we'll lend up to 50% of the value of your inventory. And so definitely when someone's looking at growing their business or they're needing working capital, they're needing cash to complete their operating cycle. Like I always talk about, a good one to understand is a manufacturing company. When they go and make a sale, they're not getting all their money day one. They might get 30% up front, but then what they have to do is they got to spend their own money for labor, for taxes, insurance, to buy inventory. That's a great time to have a conversation with me to set up your line of credit to bridge that gap. So when that manufacturing company makes that sale and then they need money to complete that manufacturing process, that's when they can come to me. I can set them up with a line of credit to use that until they finish the manufacturing process, make their product, get paid, then they pay the line of credit down, then the process starts over. And so they continually have access to that line of credit for cash, working capital, to buy inventory for short-term needs.
Well, now that's industry like that. But what about maybe it's a different animal, but it's not really commercial. But if I'm building an apartment complex,
Sure.
And I know I can get I'll get a loan for that. Do you help with that type of builder loan so you can help because we don't put our own money down when we build something. We like to go to the bank and use other people's money,
Right.
Because you never know, what's going to happen. Do you guys help your company PNC? Do you guys work with that, or you folks work with that?
We do construction loans. We just make sure that it's an owner-occupied type of situation, whereas the business is going to occupy at least 51% of the space. If it's an apartment building, then I will refer one of my local banks, and they'll come in and do the construction loan for an apartment building.
So when you do loan that money for if 51% or whatever that is that they're needing, do you send people out there? So I borrow the money. Well, how do you know that I'm spending the money towards what I'm borrowing it for?
Sure. For a construction loan.
Well, a construction loan or inventory. How do you know? You're loaned $100,000 for inventory. How do you know that inventory is even sitting there?
Yeah.
How do you ensure that? It was just a crazy question. I've always wondered.
Great question. So we do a few different things. So I'm the first line of inspection. And so I'll meet you. I'll come and do a tour of your facility. And I'm looking for everything. I'm going to ask you all the questions about your business, but also about the assets of the business, specifically the inventory and the equipment. And I'll have you walk me through the place and physically show me your inventory. And I'll make sure we go up to it, take a look at it. I'll put a good set of eyeballs on it. So I've got a good idea physically of what's there. So that's kind of the first line of questioning and first set of eyeballs on the inventory. The second thing is we're looking at your past 3 years of tax returns to see on average what your inventory levels have been on your tax returns. And then I also ask for your most recent year-to-date financials, so your year-to-date balance sheet and income statement. And on the balance sheet, that's also going to give me an idea of how much inventory that you're reporting. And so we've got a few different ways to check the numbers, check the inventory, do some spot checks.
Well, yeah, because that's even though you're loaning the money, that affects all of us on a bad loan, and we remember that 2008, 2009, a bad loan.
Still have nightmares about that.
Yeah. And that's a conversation by itself. But so down payment options.
Yes.
Somebody asked me to ask you this, and I'm not for sure exactly what that all means. Down payment options.
Yes.
Talk to us about that, please.
Definitely. So the building loan is the most of the time that's when this comes up because it's a good sized purchase. It's a big down payment, so it's a lot of cash out of your pocket. So you're trying to figure out, okay, what do I have? What can I part with, but still have enough cash working capital to operate the business for rainy day happens. And so you've got your conventional loan and your SBA loan. The SBA loan, that's your 10% down. And so basically, if it's $1 million purchase, that 10%, that's your $100,000 up for your down payment. If you don't want to do an SBA loan and you just want to do a conventional bank loan and you've got the excess cash of 20% down, then definitely we'll do that for you. So that's the two big differences in the down payment. The SBA loan, 10% down. If it's $1 million building, that's your $100,000. If you do a conventional bank loan, 20% down, that's your $200,000.
So I'm backing up again to the leverage thought, because we used to do a lot of leveraging, and I could just say, okay, Jason, I have these 3 properties over here. It's you say you want 200,000, or they're worth them, well over X amount of dollars, well over that.
Sure.
But you don't. You want cash, or you wouldn't take the buildings as holding as leverage anymore.
So we will consider that if everything else looks good. And
okay.
But if there's some things that aren't looking so good and you want to leverage your building and you're short on liquid cash and you've got a bunch of debt out there, you kind of see the picture I'm painting.
Right.
And so if it does make sense, I mean, if it's a good business, been around for a while, profitable business, the sales are going in the right direction. I mean, maybe their sales for the last 2 or 3 years have been increasing versus decreasing. Mm-hmm. So those are some of the key things we look at if we're going to get a little more aggressive on the cash down payment side.
That brings me to a question of today. Yes, everything's been increasing. Our businesses have been growing, but we're looking at a collapse. Well, maybe a collapse is a shrinkage, I think would probably be a better term. And businesses are all getting ready, to see a little bit of shrinkage happening, in the market. At least that's what they're telling us to get ready for. How do you compensate for that, or how can we do better to get a better opportunity at your bank?
So communication, and definitely talk about your business, the good and the bad, what you've got coming up. So I want to know exactly what you're good at, and we talk about like I said, the past, what you've done in the past, what you're doing now, and what your plans are for the future. Then we talk about even your competition. And so how are you stacking up against your competition? How are you better than your competition? And then as far as future prospects, new business. What do you have in the pipeline? Let's talk about that. Mm-hmm. So we get a better idea of the whole picture of the business. And then we even look at, yourself, what you're good at, but then your management too. You know that you're only as good as your team. Mm-hmm. And so we want to know definitely what you're good at, but then tell us about your team. Tell us about who does what in your business. Who's your backup, who's been cross-trained, so we really get a good idea of can you weather a storm.
Heck, it sounds to me like you're asking questions that, as a business owner, you should automatically know these things. As a matter of fact, as a business owner, because I teach how to be a general contractor, and this is part of what we teach in our contracting course, is that these are the questions that you need to ask. It seems to me like I'd be wanting to brag about it. So
definitely.
But how often do people actually come to the table prepared?
So what I do is before the meeting, I will call and email my customer and say, hey, we're going to have a meeting, but it is going to be a detailed meeting. Can you at least block off at least a solid hour of uninterrupted time so we can ask the good and the bad and the tough questions? Mm-hmm. And this is what we're going to talk about. We're going to talk about your business, what you've done in the past, what type of sales you've done, who are your customers, who are your suppliers, what's that relationship look like with your customers and suppliers, how long have you had those customers and suppliers? So then the business owner is prepared to have a detailed conversation, not a high level, this is what I'm looking for. I want to know the details, the facts, past, present, future. And so I really try and prep my customer for the meeting so we'll have an impactful meeting so we can get stuff done.
Seems to me people ought to be contacting you just so they get their business plan right. Anyway,
right?
So maybe what we need to do is have you come on to do a program or a segment with us on our training program to teach these builders as such, as some of the basics of this. Because I come at it from a business part end, but you're coming at it from a loan end, which we work with each other hand in hand.
Definitely.
And things change, You was talking about helping with, accounts receivable. Can the bank help us collect our receivables?
Yeah, glad you asked. And what we can do is we can help speed that process up. we can help automate that process. So you're collecting your money, collecting your payments from your customers faster, easier, and more efficient. And so with technology these days, and I'm grateful PNC has invested heavily in technology to make that process faster, to help you collect your receivables a lot faster. So in the past, you think about when you made a sale to somebody, normally it was a check, sometimes cash, whereas today that's changed quite a bit. You're looking at whether it's a credit card, sometimes they want to pay on your website, sometimes it's an electronic payment. And so we talk about what's that look like, and Troy, how would that affect your business if you were able to meet with a customer? And from a billing perspective, it would look like this. You would meet with me and you'd say, okay, Jason, I'm going to do this inspection. It's going to cost this amount. What we can do is we got a couple options for you. You can pay by credit card right now, or you can pay by an ACH, which means that I can send you a quick email. You can click on a link and enter in your account number and routing number, and the payment's done. And so you're just giving your customers options.
What was that last one called? Because I'm writing that one down.
Definitely. So, and it syncs with QuickBooks. And so it makes it a lot faster to collect your receivables, collect the money from your customer, whether it's through a credit card payment or an ACH payment.
ACH payment. Okay, I'm gonna.
Yes, sir.
And I myself, I do not. I'm not a big QuickBooks fan, but we use it. That's what the girls at the office use. I don't like it, but I don't know of a better one, so I can't complain.
Right.
But that ACH payment, that's a good one. So you're not going to send Vinny to collect it.
No.
Shucks. Shucks. I know some of them people. Even if they didn't know money, I'd send Vinny.
Right. Hey, you work hard for your business. You work hard for your money.
Yeah.
You just want to close that gap and find a quick and easy way for you to collect the money, to collect the money from your customers. Make it easy on your customer also. Because
something we're running across is in collecting money, which I know you're not a debt collector, so that's really not what we're talking about today, but mail, when they're sending checks.
Yes.
We are not getting our checks in a timely manner, and sometimes we're not getting them at all, and they're getting cashed, and we're hearing about this all over the place. So I know that's not just us, that's happening in the lending institutions also. So what would you all prefer? Would you prefer as a lender, I know that maybe that's not what you're loaning more than you're collecting, but do you prefer to have a different system of us paying? Do you want to what do you call that, where you just take the money out instantly?
The ACH, the direct deposit or direct withdrawal. Definitely.
Is that preferably what you all like best too?
It is, and here's why. And so the post office, unfortunately, has had, its share of issues. They've even made announcements publicly that, they've been scaling back. And I've even had personal experiences where my mail is lost or I don't get it. I've had other business owners make comments that they're not getting their mail was stolen. And so you think about that. What happens if all of a sudden you make a big sale to one of your customers, they decide to mail you a check for X amount of dollars, it's a big sale, it's a big dollar amount, they lose, their check gets lost in the mail. They're out, you're out, and then more time goes by. And in business, time is money.
It is.
So we've seen that way too many times. So we're looking at ways to close that gap, make it faster, easier through an ACH or through a credit card, so that payment is within a day or two of you getting your money. And so it reduces your risk and your customer's risk. Because again, if the customer does decide to mail you a check, they're taking that risk of sending the check in the mail, and they've got their check floating out there with their account number and routing number. There's a lot of risk for that person, that check floating in the mail. Whereas if it's electronic, like I was talking about, you can send an email and it could actually come from QuickBooks. It would be emailed to the customer, and they'll be able to just click on that email, and they'll have the choice to pay by credit card or pay by ACH right there in that email, and you just eliminate that risk of the check lost in the mail.
And boy, it's getting to the place, it's getting so bad that some of our companies like myself, we had a meeting just the other day about no more checks.
Yes.
We're literally at a place that it just is just getting to, we're falling behind, the mail's later. It's just it's just a nightmare.
Yes.
But for credit cards, little companies like myself, we have to charge extra because we're trying to already discount to get the opportunity for the job.
Right.
But do you folks charge any, if I use a credit card, do you charge any extra for me to make my payments?
So Okay, so you're asking if you want to make your loan payment to
Yeah.
me with a credit card?
Right.
So,
Because sometimes we have to. For instance, I'll use an example. We don't get the bill. The bill don't come. We don't see it, but we notice it's okay. It's supposed to be here X amount of time on 15th of every month.
right.
But here it is a week later. We haven't gotten it, and we don't want to wait until the last minute to contact you.
Yeah.
So we just pay by credit card our bill. But some lending institutions, or not necessarily lending institutions, but material people, they charge us for using the credit card.
Yeah.
We just used a bunch of heavy equipment on a project, and so we had to rent the equipment because that was cheaper than us actually buying it and then bringing in our own person to do the operating. But they charged me for using a credit card.
Sure.
I mean, it was several thousands of dollars, not just for the machinery, but what about your bank? Or do y'all charge for that? Or are you big enough to absorb that loss? Or does the credit card companies treat you better than they do us?
Yeah. So most of the time, and I'll have to get back to you on that, Troy. I know that we take, check and ACH. As far as taking a credit card for a loan payment, like for a piece of equipment we finance for you or for a building we finance for you, yeah, most of the time we don't take a credit card or something like that. But I'll double check for you, and I'll get back to you on that.
I'll tell you what, folks, do this. Don't worry about getting back with me. Folks, call Jason. And that's a great question. That would be one of the many questions. Actually, when you do contact Jason, just grab all these questions that you're hearing today and make a list of them. Apparently, Jason likes questions. As you could tell, Jason likes questions. And blast him with it. Find out, and kind of so you can get because it sounds to me like you're going to guide us in the right direction to make the best decisions. And I almost wishes that you was not just my lender, but sometimes I wish you was my accountant, you know. And speaking of accountant, do you work with businesses, accountants, to get these loans? How do you prefer to do it? Would you like our accounting department to contact you? Or who is it the best can give you the information as a mid-sized company owner?
Right.
Now, I realize you work with multi-million-dollar projects, and that's a different animal. But smaller projects, say $1 million or $2 million.
Right.
So that means we don't have all the resources that a big company does. Who's best to make this contact with you?
So what I do is I highly recommend when I meet with my business owner to sit down with me and you and your CPA at least once a year at a minimum, me and you and the CPA. But then me and you, I want to meet at least 2 or 3 times a year in person. But definitely, I highly recommend that you and I meet with your CPA in person so we're all on the same page. So we're talking about your goals for the business, where you're going, what are your needs going to be. Definitely looking at the past, but looking at your plan for the future. How are you going to get there? And so we can all talk about it to make sure that we know your goals and we can help you achieve your goals. So that's one of the things that I always really highly recommend. We meet me and you and your CPA in person, minimum once a year.
I think that's I never thought of that meeting with my lender. I've always met with the attorneys, I meet with the CPA, but that's a great idea. That's a great idea. Put us all together.
Yes.
So we talked a little bit about 2008, 2009, and we don't want to go back into history, but we are all sitting here right now worrying about an economic collapse and a banking collapse again, because we had that back then. What does it look like in your profession? I know you don't have a fortune. If you had a magic ball, we could quit today and invest. But what does it look like to you as far as, do you think we're going to have some bumps in the road I guess where I'm trying to go with this, the more money that the government's taking to pay off the debt, the less money is available for us.
Right. Yeah.
So what's that look like out there in your opinion, for us business people right now?
Yeah, that's a good question. And we do have some full-time economists on PNC that's what they specialize in, and they do actually publish letters for the public and for the bank. And so with the gas prices going up, we've definitely seen that affect a lot of our customers and definitely with inflation, that's affected a lot of our customers throughout the country, locally and throughout the United States. And so, yeah, that's a tough one right there, because it's been rough these last couple of years, but basically, inflation has gone up, gas prices have gone up, and labor shortage is definitely an issue. And so,
I see the labor shortage here as of today. is going to be next year. It'll be a different animal.
Yeah.
I've been around long enough that this will be believe it or not, my fourth downturn that I've witnessed. But this wasn't one that surprised anybody. So most of us business people were way out ahead, And so, but something I've been getting told a lot, and you tell me your opinion or your thoughts of it, because you're in the lending part of it. But I was speaking to some out of country investors, and they told me I said, how come we see such a huge? I'm seeing my business in the commercial inspection part of it quadrupled. Actually, it just was blowing up. And,
Yes.
Even though we have a lot of buildings and units, they're still empty, but they're still blowing up. How could logically it doesn't make sense, from our little world. Well, they told me, they said it's because, when you and I talked about this once before the other day when we had breakfast together, but they said, well, because they're telling me because right now commercial is a fabulous investment. We don't know what the stocks market's going to do. We kind of think we do, and it don't smell good.
Right.
We also see right now a change in the government's opinion of capital and capital gains and all this thing. I mean, it's like we got a target on our back. And I spoke then actually these are some folks from a communist bloc country, China, which Chinese folks are wonderful people, and I do a lot of work for them. But they said in China that they could just take their money away any time. They could just lock up their accounts. So they was investing over here with us and our money and our monetary funds. But then our monetary funds, well, you can see what's happening there. Inflation's hitting, and and everything's kind of dissolving. So then, what they said that they started but then when they saw what happened in Canada, and they said in Canada they saw that their Prime Minister Justin Trudeau or whatever is,
Yes.
he literally took away their money. When he didn't take away just their trucks, he did everything. He locked up their accounts. He locked up their housing. He locked up everything. And so they said that just blowing their minds. So they're buying farmland in America and businesses. They said they don't even care if you grow a crop on that farmland. It's a great, solid, best investment. I said, what about these buildings? I said, they've been sitting here empty, and you're buying this here. I said, because it's a solid asset.
Yes.
And that is blowing. And so that looks like this is in St. Louis. They're telling me this is one of the best areas in the whole country, if not the world, to be investing in, because of our prices are at a great level. Heck, I said that earlier before we got started. There's people in California buying businesses here cheaper than their houses.
Amazing.
In California.
Yep.
So what a great opportunity. Are you seeing much of this yet, or are people just not sharing that with you?
So I have seen a huge lack of inventory, and it's because everything is selling fast, whether it's most of the time at or above listing price.
Mm-hmm.
And so I've got a handful of customers who are looking to buy buildings, and they can't find them because there's nothing for sale. Things are selling so quickly or selling above asking. And so, yeah, I've been seeing it. My customers been seeing it for the last 2-3 years.
Do you have any commercial real estate agents that you would recommend?
Yes.
Well, then give me their names. I need them.
I will.
I do. I'm serious about that, because I want to contact, because I could probably help them too.
Definitely.
But it seems like this is a great opportunity for people right now. And so, we always hear about this was, and who was that? Ross Perot. Remember him?
Yes.
Ross Perot, well, like him or love him, which I kind of liked him, but he's a great businessman regardless. He said one day, about the economy, he said, there was more millionaires made during the Great Depression per capita than any other time. So, with that being said, we're here in gloom and doom.
Right.
Let's just change our thinking hats, put on a different idea. That's why I wanted you to come onto the show here, so you could actually educate people.
Yeah.
Because honestly, we just don't have a few $1 million sitting in the bank. And if I do, I'm definitely not wanting to dump it in that building. I want to dump as little into it as possible.
Yes.
Borrow from you.
Definitely.
So,
And whether it might be buying a business. I mean, we're seeing sometimes a few business acquisitions taking place where we've got the baby boomers are a prime example. We've got so many of the baby boomers at that phase now where they want to retire, they want to sell their business. And so that's opportunity for other people to come in and buy those businesses.
Mm-hmm.
And we do a lot of SBA loans for people who want to buy businesses. And so that's an area that we're really good at. We can help out a lot of people. to buy a business. We're seeing a lot of that in the medical field. We've seen a lot of dentists that are retiring and selling their practice.
Right.
And we do a lot of financing for doctors. And so PNC's got a whole division called PNC Healthcare that's phenomenal at financing, banking for doctors. And so whether it's dentists, veterinarians, I mean, that's been an area, orthodontists, dermatologists, that we really shine and help our business owners to buy a practice, buy a building, buy equipment. Or a lot of times you might have a new doctor that wants to buy into a practice.
Right.
We'll finance that for that new doctor also.
Wow. So that's good to know because I'm doing a lot of work for doctors so and veterinarians, vets, but a lot of doctors. So I got to tell a story here. I just telling Joey this one earlier. I did one for, I can't use the name of the company because I don't have their permission, but it's a big conglomerate around the world. And so when I wrote up my inspection, the property evaluation condition of it, I wrote in there, I showed a picture of their scales. And I said, scales need corrected, makes me too fat.
Nice.
I did. I told him when I called him, I said, your inspection's coming over, report's coming over. I put this in. It was just too stupid to pass up.
Right.
But so you can invest in helping new scales.
Definitely. And it's amazing. We've done a lot of dentists, a lot of banking for dentists and financing and the dental equipment. I mean, it's pricey. And so, and the build out. So when you got a dentist that's looking to buy a building or even if the dentist is looking at moving into a new space, there's a lot of money that goes into the plumbing, the construction, the electric. And so, but we finance that for them when a dentist is looking to do something like that, whether it's a dentist or an orthodontist, periodontist.
Do they need to bring anything different to the table than, say, somebody buying a house, building or buying into a apartment complex?
So it's normally the same stuff. The last 3 years of business and personal tax returns, their most recent financials, their year-to-date balance sheet and income statement, a personal financial statement. So yeah, normally the same stuff.
Yeah, and that's the dental equipment. It is expensive. But wow, some of the things that they're doing out there are really cool. But that goes with all our medical profession out there, you know. And it's just, and that stuff just costs so much. You know? So it is. Now, would they also need a 20% down, or I guess, or if they just have a line of credit, they can just buy from the if I'm not a dentist or I'm not a medical office, but if I had one, and I want to continue to make my equipment. Keep it upgraded. I want to stay ahead of the competition by getting the best equipment. Is it best for me to come to you and say, because I don't want to use their credit program.
Right.
I mean, that's just a bad, I mean, that's only a good deal for them. That's not a good deal for me as a business owner. But would you recommend that we just have a line of credit already established to buy from? Or would it be best to come to you and say, hey, I got this, I don't know what this stuff costs, but digital equipment and $100,000, which I know is not a lot of money to you know some of them folks. But which is best? Which is easiest? I mean, what would you recommend for us to do?
So definitely come to me, and I'll bring in my healthcare partners, and we'll finance that equipment. Whether it's over 5 years, 7 years, if they're buying the practice, we can finance it over 10 years, and we can wrap that all in. And so, and we'll also set up a line of credit for them too, in addition to financing the equipment, financing the real estate, financing the business. And you bring up a good point too. So a lot of times when you've got a business that's heavy into purchasing equipment each year, we'll set up a separate line of credit. It's a pre-approved equipment line of credit. And so basically we look at their information, the same thing, last 3 years, business and personal tax returns, and then we'll get them pre-approved for an equipment line of credit. And then so when they find a piece of equipment, they basically just send me the invoice, and then we basically draw down from that line of credit. Say it's a $200,000 line of credit. They find a piece for $50,000. They send me the invoice for $50,000, and we just take that off that line, and they don't have to go through the whole process because they've already been approved up to X amount. So we just figure out, okay, roughly how much are they going to spend on an annual basis on equipment. We look at the past to see roughly what they've been spending and how the equipment is holding up. Are they going to have to replace or upgrade? And so it's just another way to give them a better peace of mind, knowing that next year when they do got to buy that new piece of equipment, they're already approved. They just find the invoice and send it over to me.
Seems to me like that makes a great idea because I'm not a dentist, but say if I am, I make my money being a dentist.
Yes.
I really don't have time to figure out the financial ends of it or so I have to go to, so what you're offering actually, it sounds to me like it's a great opportunity for me to make what I do best, to make money, and you help me on the other end of it and help my CPA, so we're all working as a team.
Definitely.
Does that sound about right?
It does. And when you think about your doctors, I mean, they're making money seeing patients. So whether it's 8 to 5, they want to be in front of patients, we'll meet them outside those hours. We'll meet them early in the morning, meet them at night, meet them on the weekends, because it's, extremely important for them to keep their books completely booked up seeing patients. We respect that. And so we'll meet early, we'll meet late at night, weekends, to accommodate their schedule.
And doctors in particular, because I do a lot of work with doctors, they're great at what they do, but they're about the poorest of businessmen out there a lot of times, so they could use that extra guidance,
Yes.
And like myself, I'm an engineer. Well, I know how to build it, but I sure don't know how necessarily to finance it. Luckily, I got people in the office,
Right.
And then I got friends like Jeff Solomon. Jeff Solomon was the architect that come onto our show here a while back, and who had introduced me to Jason. So that small world, and that's how we work.
Yes.
One person tells another, and it's also how we work if Jason would have done a bad job. You
Right.
know?
That's why it's so important to strategize. Not only me, you, your CPA, bring in your insurance agent, bring in your lawyer. And so we're all working together. We're all talking, collaborating together in person to make sure that we're covering all the aspects. I mean, you look at us as your team. And
So tell me, tell me some nightmares out there that you've experienced. Like, for instance, I go to the closing table and something's happened with my loan, which that sadly happens more than is expected. But what have you had? Tell me some crazy story.
Right, sure.
The folks love crazy stories.
Yeah, sometimes, unfortunately, the person gets excited about buying a building, and they go and sign a contract without even talking to the banker first. And then, of course, unfortunately, the sellers are saying, hey, we want to close this thing tomorrow. And so then there's pressure to sign a contract, a short time frame to close. And that's never good. And unfortunately, in this market we're in, everybody's busy. The appraisers are busy, the banks are busy. And so we're seeing commercial appraisals can take, 3 weeks sometimes. And then we got to review it after we get it. And so I had a case where that's what happened. The person went and signed a contract to buy a building, and they basically did 3 days to close.
Oh.
And so unfortunately, it was, once I read the contract, that's when we started having the tough discussions of, number one, once I get your stuff, we're going to take maybe a couple weeks to get you approved. And then the appraiser could take 3 weeks. And then we got to inspect the appraisal after it's done. And so that was just a tough conversation we had at the meeting after the contract was signed by the buyer and seller. And so definitely before you sign it and make it final, let's talk about it. And so that's why it's so important for us to have these meetings. I really try 3 to 4 times a year to meet with my customers in person to talk about past, present, future. Definitely, what are your future goals and needs, so I can help you plan for those needs to meet those goals. And so,
and that's a great that you can do that to help them, because I just got a call from some folks. I did their building inspection on a beautiful old building. They're going to make a restaurant out of it. He's really a great cook. I guess he's well renowned, and he's opening up, and he's going to run it himself right up here in the St. Louis area. But he did not anticipate he took a bid for the cost of the material, for his equipment, but now he's got closed and he's got everything ready and he's got his building rehabbed, which cost him more than it was supposed to because it continued, prices continued, but now he's short on the money on his. What can you do to help a fellow like that out?
Yeah, so we got to dig deep and look at the big picture, look at the financials, the tax returns, look at the profitability, the cash flow of the business, the person.
Can you go back in and save them and loan them more money if the books worked out? Because time is money.
Yes.
They expect to get this restaurant up, and I don't know if it's even going to get out of the ground now. And they've already rehabbed it and everything.
Yeah, it's a case by case basis. Sometimes we can, sometimes we can't, unfortunately. But yeah, sometimes I have come in and to save the day, but it's. Yeah, it's a case-by-case basis because we got to look at the big picture.
Yeah, well, that's why they need to be getting a hold of you ahead of time.
Yes.
So, folks, if you got a plan, you want to do some business, you get a hold of Jason or a lending institution, and if they don't provide these services Jason was talking about, then you should know that's not necessarily the person. Maybe that's not the person you want to do business with. And the more they blow smoke up you and tell you all the great things they're going to do, buyer beware.
Definitely.
Jason has laid out a fabulous set of direction for you to go to and to follow, whether you call him or not. But if you're working in our area, he says our area, he works out through it's not just the St. Louis. He works out through the whole Midwest in here, so he could help you or direct you. And that's what we need, really. We need to have some direction and somebody we could talk to.
Yes.
Somebody we could trust. And I get calls all the time, not about lending, but about what about this and what about that, and I was at a church today and they needed this to get some personal advice, on how to do. And when I was in there, so this is what I know you're doing for your people. So I'm in there talking to them about what they asked me to come in for. But then I said, well, don't remove this. If you do, you're going to have hazardous waste. And if you do this over here, so they didn't even think about these things. Well, that's why I think it's so important that they get a hold of somebody like you. Definitely. Well, Jason, tell them, once again, tell the folks, you spell out your name, the name of your company, your phone number, your email address, how best how best reach you.
Sure. Yeah, definitely. So Jason Halteman, and the last name is Halteman, and I'm with PNC Bank. My cell phone is, I give out to everybody. It's 314-412-9000. Again, 314-412-9000 is my cell phone. Or my email is jason.halteman, spelled Halteman, at pnc.com.
Awesome. So what about, you guys have I'm sure you do, but tell us how to find a website so we can kind of learn more about the company for it even, what's your website?
Definitely. So it's pnc.com. Highly recommend, check it out, and you can see all the products and services, whether it's for the business or for the individual. And so start to finish, we do it both for business banking, personal banking, commercial banking.
Thank you for coming, Jason.
Welcome.
I appreciate it. And folks, thank you for joining us. I'm Troy Galloway, Galloway Building Services. And if you got any questions and you can't get a hold of Jason and you want to bounce them off me, give me a call. My phone number is 314-520-6655. That's 314-520-6655. You can also find our webpage, Galloway Building Services, at, of course, www. I don't even know why we say that anymore. Everybody knows that. But that's www.galloway, Galloway, GallowayBuildingServices.com. And we're going to have Jason's show put on there under the commercial industrial part of one of our tags. So you can find his show there too. And find out, more, call him, pester him. He likes it.
I do.
Thank you, folks. Thank you for watching. Thank you, Jason. Appreciate your time,
Troy.
sir.
Appreciate you having me.
Sponsored by Troy Galloway and Galloway Building Services, GallowayBuildingServices.com.